Hello everyone, and thank you for tuning in. By way of introduction, I am Azri, and along with Thomas, I am one of your in-house coaches here at WB Trading. Fantastic to have you joining us today as always. I'd like to discuss a rather popular topic amongst our clients and other traders alike, which is proprietary funding. This video will be the first part of a 3-series video in which I'll discuss your funding ideas and processes. The second video will be about how I got funded, and the final one is about the pros and cons of being a funded trader. I know a lot of traders who want to be a funded trader, and I hope this video will be beneficial and useful for you. Without further ado, let's get started.
Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away.
We frequently get asked this question here at WB Trading. I am trading a rather modest small account, and I have been consistently trading all the strategies. However, I found that my account growth to be too slow as the profit per trade is too small, making scalability a real issue. I would like to accelerate my account growth at a quicker pace, and I would appreciate any advice. Well, this is a great question, and the team and I at WB Trading, we are very happy to answer this kind of question, as we can see that this particular trader is ready to take his or her trading to the next level. This trader is already able to manage risk appropriately, able to follow the strategy rules successfully, and this trader can already see the results of our system. What is missing now is the capital he or she needs to amplify his or her returns so he or she can trade with a larger lot size, so to speak. In this case, a funded account would be a potential solution to address the scalability issues identified. From here, as your coach, we'll hop on a one-to-one coaching session to address firstly your average returns per month in order to identify which proprietary firm would be best. Secondly, we will evaluate your trading style to make sure that your trading style is suitable for the proprietary firm identified so we do not breach their trading rules. We will be with you all the way as a rock of support to hold you accountable and improve your trading performance over time. Getting your hands on a funded trading account is the most accessible way to becoming a professional trader, and typically more affordable than opening up a trading account independently. It also provides a valuable learning opportunity along the way, especially in the areas of risk management and trading psychology. By trading with a proprietary firm, you are trading with someone else's money while keeping most of the profits for yourself. You are not personally liable for the losses, as your losses is already covered by the one-off fee you pay to the proprietary trading firm. Well-established firms such as the 5%ers, for example, provides great quality educational materials with access to a daily live room for you to see what the other traders are doing. This alone is so valuable as it gives you that community feeling surrounded by like-minded people. While trading may be a viable career for many people, it can be relatively risky and stressful. The pressures associated with risking your own capital, pursuing profit targets, and of course, the fear of missing out on a trading opportunity often take their toll on even the best traders. A funded trading account can help alleviate all the stresses so you can trade with conviction and clarity. They allow you to focus entirely on your strategy. Also, from a risk management standpoint, successful traders often advocate the 1% rule. The rule states that you should avoid risking more than 1% of your account balance on any single position. For example, if you have a 25,000 account, the maximum you can risk on a single trade is $250. The 1% rule puts the difference between smaller and bigger trading account into perspective. I have to stress the importance of the 1% rule, as without this rule in place, it is very easy for the funded trader to lose their funded account. This is because all funded account providers have very strict maximum drawdown requirements, which serves as a reminder that you must prioritize minimizing your losses before maximizing your returns. This has to be understood. Trading with a proprietary fund is not for everyone. It is essential to understand the different markets and what drives them. A prospective proprietary trader can choose between futures, equities, currencies, and commodities as potential markets to trade. A significant amount of time should be invested in tracking these markets, depending, of course, on your preferences. It is also crucial to understand the movements on prices or price action based on technical and macroeconomic factors. The very important aspect of trading is identifying entries and exits. This is the first and most crucial step. Each proprietary firm has its own trading rules. For example, some proprietary firms do not allow holding positions over the weekend. There are strict rules on daily loss limits that should never be breached. It is the responsibility of the proprietary trader to familiarize themselves with the rules and make sure that the rules are always adhered to. It goes without saying that a trading plan or a trading strategy is essential for success in proprietary trading. A trading plan should cover entry rules, exit rules, and also money management rules. Trading with stop loss is absolutely critical, and trading without a stop loss would almost certainly not be allowed. Once the trading plan is finalized, it is time to practice them on a simulated account or a small account to see the edge play out. This process is part of learning, and it also acts as a way of assessing the strategy's win rate and other important trade statistics. Paper trading is also a good idea to familiarize yourself with the trading platform the proprietary firms want you to use. More often than not, the trading platform would be MT4 or MT5 or C Trader. Last but not least, a strong mindset is critical. Proprietary traders will need to be able to think in probabilities, they need to work hard each day, and they should never give up. Keep in mind that the law of large numbers will always prevail. Stay strong and do not be discouraged when the inevitable drawdown periods happen. Once you have answered the question, is prop trading a good career for me? And your answer is yes. Then the next logical step would be to find the best prop trading firm for you. The good news is nowadays most of the best prop trading firms operate entirely online. However, there are so many companies to filter and choose from. Choosing one or a few to build your prop trading career on can be an overwhelming task. One thing to look out is for the support available even when you fail your evaluation or challenge, because this demonstrates that the firm want to see you succeed. I know one firm that does a live room every night with a solid community feel where you can see what the others are doing. They also provide free resources to help trader psychology and help with traders risk management. Ultimately, the support is aimed to equip you with the necessary skills to develop your own trading plan. It also pays to check the reputation of the prop firm. Do they have social media presence? Do they offer other services? Social media will give you a good grasp of what they are like. Check their reviews on Trustpilot, and from there, you can get some comfort of their legitimacy. I would not consider any prop trading firm that has been in business for less than 3 years. There are horror stories of many prop firms that have gone bust after a year or so of operations. Scaling plans can be seen as very attractive. Further to this, it is important to look at their rules for scaling eligibility and assess if the rules are realistic and fair. Do not be blinded by an attractive profit split, as you want to also check if the firm actually pays its traders and can verify that they actually do. I've also heard stories of prop firms that allow only withdrawals via cryptocurrency. This condition certainly raises a red flag. All reputable prop firms should allow withdrawals via electronic funds transfer at the end of the month, as long as you are in profit with zero hidden withdrawal rules. My final thought is you have to choose a firm that is right for you. How you will be compensated, the growth prospects of your funded account, the payment method to access the funding, and the prop trading firm's reputation are all important. Weigh all these alongside your trading plan and be honest with what works for you. I hope this video has been helpful for you, and Thomas and I, we are looking forward to speaking with you to further evaluate your funding options on our next one-to-one coaching session. Thank you, and here's to your success.